let's actually talk about like, so this Costco trade, like when did you get into that? The end of last year? Was it the beginning of this year? I just kind of want to go back to like before you even got into these trades to just talk a little bit about the macro environment.
I'll pull up Costco. Now, one of the things that my my original mentor before I came to the steam room, let me just turn this indicator off because it's very busy and it confuses people. So let me get rid of that. So, you know, with Costco, first of all, I look for things that are, if I can make it simple to start with, that helps me because the analysis, the fundamental analysis, the grinding of the numbers, the evaluation of the management team, the evaluation of, you know, constantly looking at 10Ks, etc. I'm not, I'm okay at it, but there are far more talented people who have better acumen. They're among the smartest people in the world, and that's their job, right? So if I can look at Costco, I can tell you what Costco is, right? It's basically a big box discount warehouse where I can go and buy staples that I need at a reduced
Toilet
price in
paper.
exchange for huge amounts of it, right? Yeah, exactly. Toilet paper, or freaking cornflakes, whatever it is, right? So that's very simple, right? That I understand that, and what I also understand is that it impacts so many people because people are, you know, they have budgets that they have to work with. They have to stretch their dollar, or they have to go to places where they can get value for, you know, the time that they've exchanged at work for the money that they receive and the things that they need on a day-to-day basis. That, to me, that's very simple, right? So that's kind of where I start, and it's like, okay, well, is it quality and is it at a discount? Well, you know, at the time that I purchased, that I got involved in Costco, was like a year ago, like April of
Okay, so
23,
talking all the
right?
way back to April. We're talking all the way back
Yep.
to April. And I'm just
Yes.
trying to think back real quick. We bottomed in October the year before, right? So stocks were already kind of like on the rise here, but Costco was
Yes.
consolidated. Am I remember that correctly?
It was consolidating. That is correct, and it
Yeah.
caught my attention because there were some people who followed the stock who were looking at it, and they were, you know, they're like, hey, we think Costco, and especially the one that always catches my ear and attention, the guys that are not out there pumping their own book, but there are some people out there talking about, hey, we think Costco is an $800 stock, $850 stock, right? So that immediately catches my attention. So then I just go back and I'm like, okay, well, I learned how to read, you know, technical analysis. So I'm going to look at the weekly chart, and then I'm going to look at the daily. Do I have, you know, what are the technical indicator things that I look for? The 50, the 200, are there
Yeah.
insiders buying? How long has it been, you know, consolidating in a range? I know that from technical analysis, the longer that something consolidates in a
Yes.
range, when it finally makes a break, whether that's up or down, it usually has some kind of energy to it. So Costco is a
Yeah.
perfect example of a long
This is a
time.
really good example.
It
Really
is.
good.
So
Because
go ahead.
yeah, sorry to cut you off, but just for the people, so if in the master course, right, we go over this very, very, very detailed. Like we spend a few days on this, and just
Yep.
kind of like quick back of the napkin technical analysis that I've learned from Ron. It's like what I'm seeing here is like I'm seeing range compression basically from like April the year before, right? And it's kind of
Yes.
creating this like triangle right here that is like that's compressing, right? And then
Yep.
you have all the moving averages getting really, really, really sandwiched, right? And then you
Yep.
sort of have this like climax where it breaks out of that triangle, and then the moving averages start spreading apart, and you have a clean breakout. And that base, that
Yes.
compression, is freaking 1 year long. So it wouldn't
Yeah.
surprise me if during that period you were selling condors above and below that range.
Pardon the brief interruption, but I just want to remind you that the final live Sang Lucci Master Course ever starts on March 25th. If you're ready to put in the work, we can make you into an unbreakable trader. You can learn more and get access to a bunch of free bonus content over at sanglucci.com/MC, and that link is in the description as well. All right, back to the video.
Well, now here's the thing with Costco, because it trades at such a high dollar value,
Yeah, it's not
is
easy
it can be
condor.
very difficult to trade condors on something like that.
Mhm,
And my intention was always to be long-term long on Costco anyway. So for
mhm.
me, it was like, kind of, so
It was
I
just a
have a,
timing thing.
yeah, and it's more like, okay, so for example, let's say you have a position size, and in Costco, I have a position size of 30 leaps, and it's always been 30. But I kind of had to leg into it, and it was always like, all right, well, if I've got 30 leaps and I get to an
Mhm,
area of resistance, do I write 30 contracts, or do I write 5, or do I write 10?
mm,
It's always like a little bit of a massage in those areas, especially when you
mhm,
just get into it, because you have to figure out how it trades if you're going to have any success with the short term, right? Because the long
mhm,
term is more forgiving just based on the amount of time that you have, right? The short term can be very tricky. So I don't want to get caught in a full position. So if I write 30 against my 30 leaps, I
yeah,
could find myself in a very bad position if the stock breaks out and I can't buy back the short term contracts at a price that's gonna leave me without a loss short term. Does that make sense?
right after.
So yeah, so when I first heard, first of all, if you look at the chart, the thing that I find very useful are anchored volume weighted average price. And there are, if you read the book by Brian Shannon, he goes into detail about how he likes to use anchored volume weighted average price. I like
Mhm,
to use volume weighted average price on things like extremes. Where was the low? So here's the low back to 2021, all the way down at what, 309, right? And you had this move that, it went from 2021, a low, and then it peaked out in April of 22 and retraced. So those things, I'm like, all right, I can anchor to that low, and then I can
mhm,
measure that move, and I can see from a Fibonacci standpoint, okay, did it come back to an area where it found some support? And then you get these other areas that you can measure. So for example, this high back in April of 22 and the low in May of 22, that was a dramatic move. So I've got an anchor that ties back to 21. I've got a move, a shorter term move, but fits inside of the bigger picture. So for me, using technical analysis, if I use that little low and I just draw Fibonacci up to
mhm.
this little area, I can just see, okay, did it pull back? Look at where it pulled back to. See the golden line? So
Of
that's, I
course, it
mean,
goes back to
that
this.
is an area of Fibonacci retracement that we pay attention to. So I just go
Mhm,
back and look, what did it do? What did it do? Does it make
mhm,
sense? I see those things, and then I see this compression, and I see the 50 and the 200, and I've got an anchor here. So what catches my attention? Where do I add? Where do I leg in? Well, do you see these little
mhm.
pullbacks down to these anchored areas? That's where I'm
Yeah,
legging in. That's where I'm legging
yeah.
in. So,
So those are
um,
the alerts that you have that sometimes we hear on the stream when something
yes,
goes off. That'll be
exactly.
like an alert on one of
Exactly.
those, and then can be like, okay, I'm gonna put buy 10 here, for example.
Yeah, exactly. And
Mhm,
those are the spots where if you're in your short-term trading, if you're
mhm.
collecting some cash, you're giving yourself, when these moves happen, you're giving yourself some free money to get into more of that position at a discount, right?
Okay. And were you in your entire position before it broke 500? Were you able to build your position before 5, or did you add a piece kind of when it broke the 500 level?
I was when it finally broke out the first time up here, I was in
Mhm.
15 contracts, and then
Uh-huh.
I took the profit, and I added another 15 here at this 550-ish area. And then
Uh-huh.
all I did was when the continuation of the move, I just kept,
Yeah.
I had a fib based off of this move. I'll show you. And this is what I did. So I used that low, and I used this high. And then all I
Mm.
did, you see the little
You see the
range now that
extensions.
forms
Yeah.
with the fib. So as it
Yeah.
broke out, I was like, okay, I'm going to roll. It got to the next fib. I was like, I'm going to roll. It got to the next fib. I'm going to roll.
Obviously something that worked really, really well. And I mean, are you able to give us any, like, are we talking 5 figures, 6 figures, 7?
The Costco is 7 figures. The Costco is rolled up 6 or 7 times, I think. And then on Wednesdays, I go over iron condors.
Well, thanks again, Ron. Enjoy the
No worries.
rest of your day and enjoy your weekend, and we'll talk soon.
Awesome. Thanks.
Take care. Bye.
Later.